Which is profitable in India, old regime vs new regime tax? The choice between the old and new tax regimes in India depends on individual circumstances and financial situations. Here are some points to consider. Tax slabs. The new tax regime has revised tax slabs, providing an opportunity to save rupees 17,500 in taxes. Standard deduction. The standard deduction has been raised to rupees 75,000 under the new regime. Family pension deduction. The family pension deduction has been increased to Rs 25,000 from Rs 15,000 under the new regime. Rebate. A tax rebate of up to rupees 12,500 is applicable under the old regime if the total income does not exceed rupees 5 lakhs. Under the new regime, a rebate of up to rupees 25,000 is applicable if the total income does not exceed rupees 7 lakhs. Deductions and exemptions. The new regime has fewer deductions and exemptions available but lower tax rates. Individual circumstances. The choice between regimes depends on individual circumstances, such as income level, tax-saving investments, age and family income. Who benefits from each regime? Old regime, suitable for high-income earners and those with significant tax-saving investments. New regime, beneficial for middle-class taxpayers with a taxable income of up to Rs 15 lakh and those who make low investments. Let us calculate our tax now. Thank you.